It can be very confusing when you go online and you see this futures trading, forex trading, which one should you trade? Now with the rising popularity of futures trading, this is exactly why I want to launch this video to discuss exactly what I trade and why, and if you should be trading futures, because I don't think there's one answer to this. I think it's really dependent on what you're looking to do, what you're looking to trade and how, and I want to discuss how my strategy applies to futures. So it's actually very important to understand these concepts and understand if futures trading is right for you or if you need to make the transition. So with that being said, let's get straight into this video and get to the point of futures or forex trading. Let's go. All right, so the first thing we're going to discuss is what is futures and what is the difference from it from Forex. So I found this website here and it kind of sums it up pretty easily. So I'm going to give my kind of explanation here to simplify it for you guys. But essentially, when you're trading with futures, it is very similar to a Forex. You know, the whole concept is the same, but you have to trade futures charts. That's going to be one of the biggest things. And future assets, right? You can't really trade currencies like the options you have to do with Forex, which is a CFD type broker, contract for difference, right? So that's what CFD means. So you'll have to be trading, you know, the futures charts, which for gold will not be XAU, USD will be GC. For NASDAQ, it will be NQ, and you know, you have mini as well, depending on what sizes you're trading, right? So you can check out this website here, but essentially what it means is that futures have an expiry date and you are basically trading the asset and owning the asset, whereas on a contract for difference, you do not own the asset. There is a conception online that you cannot trade currency pairs. You can. There are many USD pairs are there in futures. They are just look slightly weird and slightly different. I would say futures trading is going to be more focused towards commodities and of course indices, right? Such as you know, S&P, NASDAQ and US 30, right? That's going to be a lot more of a focus if you're a futures trader, right? Which is going to be a part of this video. So just wanted to give an overview of what it is, and you can see the differences here. So future contracts are standardized into lots. That's not really true. They're standardized into contract size. You have micro contracts and you have standard contract, which is true. In Forex brokers, you can control your risk a lot more. And the cost, this is another thing I want to go into before I show some examples on the chart here, is about the differences is the cost. People say that Forex is more expensive to trade. Typically, if we look at it, you could say that, yeah, futures is a little bit cheaper, but it's not a drastic amount that should change things, you know, in a huge amount. So let me give you an example that many people don't discuss here. So when we're trading futures, where are we focusing? We are focusing on indices, right? But in a Forex broker, indices does not charge commission. There is no commission when you open the trade. So if you're smart with your break-evens, you could put your break-even slightly in profit and the spread that is there will cover for that, and you will not lose anything. You will actually make money, right? You will make money because the spread is pretty tight on indices, even on good Forex brokers. So you actually, the costs are very much the same, and there's a lot of costs, and there's individual costs depending on what asset you're trading on futures that come with holding the trade, right? Because futures market close and open, whereas of course general markets do as well, but it is different on the futures market. And I don't want to go into that technical stuff, but there are ongoing costs. So the cost to trade, yes, there's zero spread, which can be attractive that your trade directly goes into profit, but at the end of the day, the costs are pretty similar. So big question, what do I trade? I trade Forex. What is the reason why? I use CFD brokers because I want to have the flexibility to trade currency pairs and to trade indices all at the same time. My main trading pairs is going to be consist of gold, GBP, JPY, and DAX. DAX is the German index, kind of like the US 30 of the London session. So that is what I trade, and I can do all of that on the same brokerage. Now, if I was just trading, let's say, indices here and gold, then there would be no reason for me to need to go and open a CFD account. I could simply trade on futures. The second thing is location. Location is going to be a big part of this, because if you're someone who is trading in the US, it is very difficult to get your hands on a broker with good spreads, a CFD broker. So futures can be very, very attractive if you're in the US. And I'm going to explain to you exactly what are the differences and how to make the decision. But the decision is actually going to be made on location here. But I do want to show you on the charts now some of the examples of how futures work and compare that. So right now I'm on Owanda. Owanda is a Forex broker, a CFD broker here. And you can see I am on the gold chart here. So I'm going to run through a couple of setups here. This setup right here is a short position following one of my rules here. So I would be looking to target areas down here with stop loss above this previous candle highs here, something like this. And this would have been my plan on the normal Forex broker, right? So if we can see, we do get that, and that does play out quite nicely. This is one of my favorite setups with price closing below here, with nice clean range to fill the range down to here. If you're interested in seeing more setups, definitely subscribe to the channel, leave a like on this video as well. Would appreciate to get this video up to 500 likes, would appreciate that. And subscribe, join the channel, and see all of the content. I do explain these entries in all of my videos. You can see that on the channel. So going forward here, you know, this is one of my setups. If we go see on GC1 is gold futures chart, you can see that setup is present there on the futures chart. So if you were focusing on the futures chart, then this would be a valid trade. So what is nice about futures chart, and one thing I do respect drastically, is that the futures charts are all centralized. They're centralized. Now this one is going to come from COMEX. COMEX is the commodities exchange, but all the other charts are going to come from CME, which is Chicago Mercantile Exchange, but they are centralized to these, let's say, providers, right? These market makers. Okay, so the nice thing is that everyone trading futures is going to be looking at the same chart. When it comes to brokers, Forex brokers, CFD brokers, not everyone is going to be looking at the same chart, because the brokers and the liquidity providers they use is going to determine how the charts look. So there could be slight differences. So I think that is a major point as well, and it is something we have to take into consideration. If you're someone using, let's say, supply and demand on a lower time frame, which you need your demand zone to be tapped, on the futures chart it could be tapped, but on the Forex chart it might not be tapped, and that's where you're going to find issues, right? And this is a time where you will just have to accept that, hey, I might just miss a move, and that's going to be in this example. So this is more of a complex trade where you're anticipating price to be very weak at this level, anticipating price to be able to move through this clean candle zone, but not only move through it, but break through it, right? Especially with this weakness pattern here, you expect price to break through it, okay? So what do we see here? Well, first of all, we see that price gets the close below here, right? This actually happened in London session on Friday. So we get the close below, and that's the trigger of the beginning of what? The beginning of this move to continue down, eventually to tap TP there. So what do we see here? Well, we see that price did close below to give the initial trigger, right? The initial trigger was the close below, because as I said, I trade based on candle closes below. When we check the futures chart here, there was no close below. That's that same support, there was no close below. So if you're trading on the futures chart, this is simply a trade you would not take. You would not notice it again. You would just move on and wait for your next setup. So there'll be times where there's maybe a trade that you are not able to catch, but if we're looking at long-term data, it should pan itself out. And this is why I'm a trader who likes to trade on basing on higher time frames, moving into lower time frames such as a 15-minute, not these really low time frames like the 1 minute, because the 1 minute on the futures chart is going to look quite messy here. As you can see, it's a lot different, and with all of these gaps here, if you're trade on a lower time frame, this is where you struggle. So that's why higher time frame will always guide, and obviously the futures charts being centralized is going to be beneficial, but there will be times where maybe there was a trade on CFD brokers but there wasn't on futures, and you just have to miss that trade. So to wrap up this video, I'm going to answer the question, should you trade futures or should you trade Forex? And the question is going to be, where do you live? Because I know for a fact a lot of people in the US, we have a lot of people in the exclusive group who are also in the US and international. Then they run their prop firm challenges on futures here. So I know that for a fact, and we discuss that often, and they trade the same concepts as me. So that's just based on location, right? So do I think it's a good idea to have futures? Yes. If you're in US and that wants to be an option for you, then definitely can look into it. Do you have to switch to futures? No, you don't have to switch to futures. If some funny business happens with brokers, we can make a switch to brokers. We can make a switch to futures. We have that flexibility and option. So this is what I wanted to come out and say and make a video about. I got this question a lot. I hope you guys enjoyed this video and it made sense. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.